Well, let's introduce now on the show the management of Intellect Design Arena, which delivered quite a good set of third quarter numbers. Highest ever quarterly profit after tax at 80 crore rupees. So what's the outlook ahead and what led to the good quarter? Arun Jain, Chairman and Managing Director of Intellect Design Arena, joins us now on the show. Thank you so much, Mr. Jain, for giving us time. So to start with, what has led to the strong performance, the sharp margin expansion as well?
I think this is a last 3-quarter combination. If you look at it, Intellect has performed very well from last 4 quarters. Entire 2020 was a great year for us. It's the outcome of 3 things. First is right selection of the market. Second is right selection of the technologies and right products which make a difference to the customer. So intersection of this market, technology and product drives the growth and the margins both. So in last 9 months, we have generated cash of 250 crore in just 9 months. And company has done EBITDA margins have moved up to over 25% in last quarter. So it's continuously growing because its business model itself provides for this growth in margin and EPS. So last quarter annualized EPS was about 24 rupees, which is significantly higher than earlier Polaris itself. So it's a great journey, what we started with market understanding, very well applying design thinking on customer, what customer is looking for in digital space. In digital space, customer is looking for driving more customer, driving more products, driving more transactions, reducing operating cost. And for that, we built up a technology which are composable and contextual technologies. And these technologies are microservices, API-based technologies, which gives the hyperscale and high performance technologies. And these technologies, when we invested earlier in building a data platform also, because data is a new oil, is applied to the actual products. So we have advantage of the technologies of fintech and robustness of a financial traditional product player. And that intersection is what enjoying us to win in a advanced market like Germany, Americas, and Europe, besides Middle East, Africa, APAC. So that's a reason for comprehensive growth coming in 2020 as a whole year, and that's what gives us a confidence to grow our EPS again 30% next year.
What led to the strong margin expansion, and do you think this could be capped if some of the costs make a comeback?
Yeah, I think margin expansion is determined by the 3 things. The license link revenue, that how the license link revenue has moved from 45% last year to 54% this year. So license link revenue gets generated almost 80% margin to level. So that drives a higher margin growth. The more share of the advanced market drives the margin. So there's a possibility in which currently our advanced market share is 56%. We are looking to go to 60%. That drives the margin growth. And third thing is my effective cost management. So our cost is, being a product company, it's not linearly growing with the revenue growth because new sales drives more direct revenue and it's not people dependent. So our costs are stabilized at 300 crore a quarter or 1200 crore a year. From last 4 quarters, if you observe, this cost is 280, 290 crore EBITDA cost. And that is what is driving margins. So this is a right stage in a product journey when we have 5 years are completing in Intellect Design, where we are getting all the levers what we designed for are playing for us.
All right. Okay. Now, if we talk about deal wins, this quarter you've seen 10 deal wins, with 6 of them being large deal wins. So talk to us about how strong the deal pipeline is, which segments are showing more traction.
I think our products are classified as the number 1 in retail banking. We are Intellect Digital Core, which is competing against Temenos or Finacle, is now gaining significant momentum because it's built on a microservices API marketplace, and that's what we won the large deal in Germany based on Intellect Digital Core and one more deal in Canadian market. and acceptance of Intellect Digital Core in the European market and American market, which is one of the difficult market to acceptance. That's a one piece which is driving and rating us number one in IBS league table. Second is our niche space of corporate banking and especially transaction banking. Today in digital world, transactions becomes a critical piece, and our bet 10 years back to focus on global transaction banking has resulted into our leadership product like complete digital cash management solutions. We have a liquidity management solution, trade and supply chain finance solution, payment solutions. This is driving the second leg. And third leg is around data as a service. So we have built up a data platform in US, which we had launched in US 2 years back. And now we have substantial traction on aggregating 8,000 data sources to combine decision-grade data. And that's the third reason for driving a large growth engine for us.
All right. Mr. Jain, in the last quarter, you won a good deal from Germany. So how important is this in terms of revenue and profits over the next coming quarters?
Yeah, so I think I was explaining Auto is the second largest retailer after Amazon in Europe. And they were evaluating a core banking solution. They invited 27 different players in the world and being chosen number one player in that marketplace, that too by the German architects, and the intensity of which they really evaluated our exercise. It was more than any analyst could do it for us. They built up a POC before making a selection, and we could able to demonstrate close to 5,000 to 7,000 TPS transaction per second, and it is mind-blowing for them that how can a core banking technology, which is normally between 100 TPS, can ramp up to 5,000 to 7,000 TPS. So that's a very, very important deal from validation of our technologies in a European advanced market, being an Indian player. And once it is validated, I think the price point in Europe for us, once we compete with Temenos there and compete with local player FIS there, I think it's a very, very big success for Intellect in last quarter, which will drive multiple sales and multiple pipeline, which is there, providing assurance to everybody that now Intellect has arrived in core banking system with the fintech technologies and robustness and functionality of last 25 years of knowledge, which we have bundled into functionality.
Okay, understood. Now, I just want to ask you a little bit more on the deal wins. Like I mentioned, 6 large deal wins. So could you quantify this deal pipeline?
The total deal pipeline is close to 4,000 crore is the deal pipeline what we have as of now, and we are working in 41 destiny deals. These deals are more than 20 crore each, which we call destiny deals. So there are 41 such deals which we are working on, and the last quarter when we win 6 deals out of 41, then we need to create a pipeline of another similar number of sets of deals. So we built up 6 large deals and we lost 2 such destiny deals. So our ratio of winning the deals in the international marketplace has gone up. I must give a gratitude to my product teams, the technology what they built, and the sales team, how are they able to communicate our composable and contextual story to our customer, which makes us higher winning rate than our competitors in a global marketplace.
All right. In the last 1 year, the revenue mix has changed. Your share of EMs has risen to 28%. Advanced markets, though, has come down to 58%. And the Indian share has risen to 15%. So is this a conscious strategy to change geography mix? And if you could share with us the demand trends as well across some of the key geographies.
Very good question, because market selection is one of the important point in a product space. So first of all, as Intellect, we are present in all the markets. So it's not a IT services, which is more driven by advanced market syndrome. We operate in more than 50 countries and delivering our financial technology solutions in them. So our ideal mix, what we have planned for is 60-40, 60% from advanced market and 40% from emerging market. And that's a strategy we laid out in 2017. And that is, we are continuing that strategy. 62% to 58% are somewhat some large deals when they signed up in a particular region. That drives this ratio between 58 and 62%, but it is close to, it's a needle at a 60% level. And 60% level is a good benchmark because the advanced market margins are over 65%. Operating margins of our advanced market are close to 65%, and emerging market is above 50%. So the average it out is around 60%. So our focus is our operating margin should be 60%, which drives our EBITDA margin to 30% levels. So that's the overall strategy.
All right. And Mr. Jain, you did mention that you see your EPS growing by 30% in the next year. However, do you foresee any challenges, in achieving this goal?
Yeah, so challenges-wise, there are two challenges. I think we need to build a pipeline for 22-23 next year. So this year pipeline looks to be healthy pipeline, but we need to build that pipeline, and for that COVID has to go. So by June, July, if COVID goes, then for building a pipeline, you need a physical presence in front of the customer. We need to invite them for some events. So that is holding us back to build up a pipeline for 22-23. So now the pipeline is organic in nature, webinar in nature, which has an impact, and we have not suffered anything till now because by building that pipeline. So COVID by June, July, if it is over, then we will be able to build up a healthy pipeline for next 2 years to come. The second challenge, which could be there for us, or risk could be there for us, is competitive pressures on the pricing sometime. And we are observing even Western companies are bringing down the pricing to very low level, which is with a large capital base there they have. So they wanted to compete with us in some of the Middle East, Africa markets, or even including European market. Sometimes we are finding the pricing to be coming down in, but we, as of now, we have positioned ourselves as a premium product sales company. So we are not decreasing it, but going forward, we need to observe how the competition landscape react to our dominance in some of the deals what we are pursuing.
Okay, Mr. Jain, it was great chatting with you. Thank you so much for giving us your time today on ET Now. Well, that was Intellect Design. Third quarter numbers pretty strong. Well, on that note, we'll take a very short break. Be right back.